Hey everyone, and welcome. Today, we're diving into a really powerful tool for your financial future here in Singapore, real estate investment trusts, or REITs. The big question is, could they be the cornerstone of a secure and comfortable retirement? Let's find out together. But before we get into the how, let's tackle the really big question. The one that probably keeps some of us up at night. How much money do you actually need to retire comfortably? Have you ever really sat down and done the math for yourself? Okay, brace yourself. It's over 2.2 million Singapore dollars. Now look, this isn't just a number we pulled out of thin air. This is based on a calculation for a 43-year-old who wants to retire at 60 and live until 85, spending about $4,000 a month after you factor in inflation. That is a pretty daunting number, right? It really highlights the challenge we're all facing. So how in the world do we start to close that gap? Well, here's how we're going to break it all down. First, we'll talk about this funding gap. Then we'll introduce a different way to invest in property. And we'll dig into 6 key reasons why REITs are so compelling. We'll also look at how they help build a stronger portfolio. And finally, we'll wrap up with your next steps. So that giant number we just saw, that $2.2 million, that's what's known as the retirement funding gap. It's basically the space between what you have saved and what you're actually going to need. And that, right there, is the problem we're trying to solve today by looking at smarter ways to make our money work for us. And this leads us to a totally different way of thinking about property investment. I mean, what if, instead of saving up for years to buy a single condo, you could own a small piece of a massive portfolio of different properties? This is exactly where real estate investment trusts, or REITs, enter the conversation as a potential game changer for retirement. So what is a REITs anyway? The easiest way to think about it is like a unit trust, but instead of stocks, it's for property. It's a company that owns and professionally manages a whole portfolio of real estate that makes money. We're talking shopping malls, fancy office buildings, even hospitals. And you can buy shares in that company, just like you would with any stock on the exchange. The beauty of the REIT model is just how simple it is. It's basically a 3-step cycle. First, investors like you and me pool our money together. Second, the REIT takes that capital and goes out and buys and manages all these properties. And third, and this is the best part, by law, the REIT has to give at least 90% of its taxable income back to us, the investors, in the form of dividends. This creates a really direct and pretty reliable stream of passive income. All right, so let's get to the good stuff. Why are so many people looking at REITs for their retirement? Let's jump into the core of this strategy and break down 6 powerful advantages that REITs offer. First up, liquidity. You know how it is. Trying to sell a condo can be a nightmare. It can take months, sometimes longer. But with REITs, your investment trades on the stock market, just like a regular stock. That means if you have an emergency, say an unexpected medical bill, you can get your cash quickly. That kind of flexibility offers incredible peace of mind, especially when you're retired. Second, and this is a big one, high yield. This is where REITs really start to shine. Here in Singapore, it's pretty typical for them to offer dividend yields somewhere between 5 and 9%. That's a steady, consistent stream of passive income to add to your retirement funds, and it often beats what you'd get from a regular savings account or even some bonds. Okay, number 3 is absolutely crucial, hedging against inflation. Just look at this table. With cash, your purchasing power can literally be cut in half in about 20 years. That's scary. But because REITs are tied to actual physical properties, rents and property values tend to go up with inflation, which protects the value of your savings. And hey, look at that last column. REITs also give you the chance for capital growth. The others, not so much. Fourth, let's talk about taxes. Because let's be honest, what this really means is you get to keep more of your hard-earned money. In Singapore, dividends from REITs are mostly tax-exempt, and there's no capital gains tax either. Now, compare that to owning a rental property, where you're paying taxes, agent fees, and all those maintenance costs. With REITs, your money just gets to work a whole lot harder for you. Reason number 5 is all about your lifestyle. It's hassle-free. Seriously, do you really want to spend your golden years dealing with calls about leaky faucets or chasing down tenants for rent? With a REIT, a team of professionals handles all of that. You are the investor, not the landlord. You get all the benefits of the income without any of the headaches. And our 6th reason is instant diversification. Think about it. Buying a single property is like putting all your eggs in one basket. If something goes wrong with that one property, you're in trouble. But a single investment in a REIT can give you a piece of dozens, maybe even hundreds of different properties across different sectors and even in different countries. This spreads out your risk and makes your whole portfolio way more resilient. And finally, let's circle back to growth. It's not just about getting that regular income that beats inflation. There's also the potential for real capital gains. As the properties in the REITs portfolio go up in value over time, so does the value of your investment. It's this powerful 1-2 punch of both income and growth that makes REITs such a compelling option. So, we've talked a lot about why diversification is so important, but what does a diversified REIT portfolio actually look like? Let's make this a bit more real. A really smart REIT portfolio isn't just focused on one thing. With a few clicks, you could own a piece of a super busy mall like Vivo City, a critical healthcare facility like Mount Elizabeth Hospital, a massive logistics warehouse, and even a hotel over in the United States. This kind of diversification across different sectors and geographies adds yet another layer of safety to your investment. Okay, we have gone through a ton of information. So what are the most important things to remember? And probably more importantly, what are the next steps you can take to actually put all of this knowledge to good use? Now, let's be real for a second. REITs are investments. They are not a savings account. Their value can go up, but it can also go down. So the key here, as with any investment, is to do your homework. Dig into the different REITs out there, understand what properties they own, what their strategy is, look at things like their gearing ratio and occupancy rates, and of course, it's always a good idea to chat with a financial advisor to make sure whatever you choose fits your personal situation. You know, if I had to sum it all up, this quote really just nails it. REITs open up the entire world of global property investing to everyday people. They offer huge diversification with a small amount of capital, and best of all, with very little hassle. It's truly a democratizing force in the world of real estate. So I'll leave you with this one final question to think about. Take a good, hard look at your current retirement strategy. Is it really built to fight off inflation, to generate the income you need, and to provide the security you want for the retirement you absolutely deserve? Thanks so much for joining me for this explainer.